Pierre, Musk is anything if not ambitious. What is your take so far on what we've heard?
So we've heard very little so far. So I wouldn't take anything major. And I think the one thing I would refer to is probably the tweet Elon Musk sent out earlier today or last night, where he basically laid out that most of what we're going to learn during this battery day will be looking out several years away from here, and that's how things got started. I think if you take a step back and you look at where Tesla stands today, what I would say that the company is at the top of its game. They have like a massive competitive advantage on their technology. They have batteries with a better range, with lower costs, with a better performance. And so what we want to hear today is, of course, how does the company maintain and defend that competitive advantage over several years? Because what you see around Tesla is that traditional manufacturers are progressively getting there, even if they are still like way behind Tesla on electric powertrains. Then you see like a handful of decent startups that seem to be putting together technology the right way. So they're very small, they're very early, but they're getting into the market. So a lot of people are going after Tesla, and the question is, how does Tesla maintain the lead? And I think what we've learned from battery technology over the years is that battery technology is not a place where things change overnight. It's an improvement that gets delivered over the years, and that's what we're going to hear about today.
So why just a neutral rating? You know, obviously we've seen shares soar in the run-up to this. Musk tempering expectations. We saw a bit of a decline over the last 24 hours. Now shares going back up again. What is the skepticism in your neutral?
Yes, you know, when you rate a stock, you can take a lot of different perspectives. It's never like a single answer kind of situation. So when we initiated coverage on Tesla a couple of years ago, a bit more than a couple of years ago, our view was in 2025, Tesla is going to be the scale of BMW. Tesla is going to be more profitable than BMW, probably twice more profitable. And Tesla would be a growing company with still a lot of upside opportunity and optionality beyond cars in the insurance business, in the energy storage business, et cetera, et cetera. And so when we laid out that 5-year view, that was at the time a 7-year view, and now it's a 5-year view, I think we still have this picture in mind. And if you look at a fair price, at a fair valuation for a picture like that, that puts the stock around 2005. Sorry, I'm still talking older shares. So here, like $500 to $600. And the stock, hovering in the low 400s today. I mean, if you buy a stock 400 today, hoping it gets to 600 in 5 years, that's fine. You're going to make money, but that's not a great investment. So that's the reason why we have like a neutral perspective on the name. And of course, and then you have to think.
We're looking, Pierre. Hang on a sec. We're looking at a live shot of all of the Teslas parked outside the factory in Fremont, California, where the meeting is happening mostly remotely. You're seeing drivers and shareholders getting out of their cars and stretching their legs there. They're on a break right now. Some of the other headlines coming out of this, Musk saying a beta version of a full self-driving Autopilot feature will be released in about a month's time. You know, there's been ongoing controversy about Autopilot, especially a full self-driving version of it. What is your take on that?
So my take on that is that on average, he's like 3x too quick in the way he looks at the future versus what happens. So maybe in 3 months we get it if you promise it for the next month. And then you have to be very clear about what, like a beta version of a full driving service would be. That's going to be a software that gives your car the ability to drive through, on paper, any sort of situation. But it's just going to be on paper. It's going to be a service, like a feature in your car, that will still require your maximum attention as a driver. Okay? So then the key question is not, is it going to really work or not? Because if you define really work, the car can drive by itself and you never take care of it, that's not going to work. If really works mean people really enjoy using it and find it makes their driving more enjoyable and safer, then it's probably going to work. And then the key question to me is, when do people, see the value in the product and see a price that is going to match that value? And that's going to be the very exciting, next couple of years on Tesla, like going through pricing discovery, probably moving away from selling the service for a one-off $8,000, but maybe moving into a monthly subscription so people can use it. And then discovering really how people enjoy it and start, talking about it around them, becoming like promoters of the service. And then, of course, if that becomes successful, it's a significant game changer for the economics of Tesla, because whether you get it as a one-off charge for the driver or a monthly subscription, it can boost by 50% the profit per car if we reach like very high adoption.